welcome back to Investing Talk Podcast.
Today we're looking at Micron technology. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave in the comments below.
Yeah, definitely let us know.
So our mission today is really to figure out if Micron is truly structurally different this cycle, or if it's maybe just, a cyclical peak dressed up in AI closing.
Exactly. So let's get into the analysis. For Micron technology, the investment thesis is, well, it's almost entirely about one thing, AI infrastructure.
Right.
AI.
But we have to be really clear about what exactly they're selling here. We are talking about high bandwidth memory, HBM.
Okay.
This isn't just your standard memory chip. Think of it more like the specialized high-performance plumbing required only for these massive AI GPUs.
Gotcha. So specialized gear.
Specialized gear. And this feels like an explosive structural change, not just the standard cyclical growth we've seen before in memory. And the sheer demand, I think, is what confirms that maybe this is a different animal this time.
Totally.
Our sources are showing that Micron's HBM products are reportedly sold out through the entirety of 2025.
Sold out? Completely.
But here's the kicker, apparently. Nearly all of their HBM3 supply for 2026 is already committed.
Wait, hold on. Isn't committing supply that far out, kind of risky? What if some new tech emerges that suddenly leapfrogs HBM3?
That's a fair question.
And how much confidence does that commitment actually show in their current product roadmap? Is it confidence or just, locking in orders?
Well, I think it shows absolute conviction. I mean, when you have that level of future demand basically locked in,
okay,
it guarantees both revenue clarity, which is huge for planning, and critically, it allows them to command significant premium pricing.
Ah, the pricing power.
They control the scarcity, right?
Yeah.
This kind of shifts the power dynamic away from the historical memory buyers and really puts Micron in the driver's seat.
Okay, that makes sense. So if we connect this whole supply story back to the financials, the acceleration we've seen recently is staggering. It really is.
Yeah, looking at the fundamentals, the growth curve is almost vertical. Fiscal year 2025 revenue soared to $37.38 billion. That's a 48.85% year-over-year jump.
Wow, nearly 50% top-line growth. That's fantastic.
But the profit growth, that's where we really need to stop and, analyze the leverage they're getting.
Okay.
Trailing 12 months, TTM, net income, so profit over the last year, hit $8.54 billion.
$8.5 billion. And the growth rate.
That is a 997.56% year-over-year increase.
Whoa, nearly 1,000% growth in net income.
Right.
That's not a trend. That feels more like an anomaly. It just demonstrates incredible operational leverage, doesn't it?
Totally.
Meaning they are driving just enormous profit from every additional dollar of revenue, probably because of that premium pricing on the HBM we talked about.
Exactly. And that TTM earnings per share, by the way, is sitting nicely at $7.59.
$7.59 EPS.
And what's really fascinating here is how the market seems to be anticipating this continuing.
Right, the forward look.
If you look at the current price-to-earnings ratio, the PE, it's around 29.48, which is, robust for a tech stock, but not crazy maybe.
Standard tech multiple range almost.
But when we talk about forward-looking metrics, based on what analysts anticipate for earnings acceleration over the next year, the forward PE drops dramatically to 13.39.
Okay, 13.4. We need to explain what that drop really means in plain terms for you listening.
Good point.
When the price-to-earnings ratio drops that aggressively from the current number, like 29, down to the forward number, around 13, it basically means the market expects Micron's earnings to essentially double or maybe even more over the next year.
That's a massive implied forecast baked right into the current $251.17 billion market cap.
Huge expectation. So if that guidance actually holds,
If it holds, yeah.
a forward PE of 13.39 puts Micron potentially, maybe undervalued compared to some of its high-growth peers focused entirely on the AI boom.
Some of those are trading north of 50 or even 60 times forward earnings.
Exactly. So it suggests there could still be room for the stock to run just to catch up to the expected growth that's seemingly already on their books.
And they also maintain that small but, consistent dividend, $0.46, about 0.21% yield.
Okay, so strong fundamentals, big expectations. Let's maybe shift away from just the quarterly numbers and look at the competitive moat. What makes this growth sustainable for, say, the next decade?
Good question.
Micron seems to hold a dominant position in this high-end AI memory market, not just because of HBM itself, but maybe because of the deep integration they have with the massive hyperscale data centers, the big cloud providers, the infrastructure builders.
Yeah, and this is where that long-term infrastructure play comes in. And it's, frankly, huge.
The mega fab news.
Exactly. They recently received New York State infrastructure approval for a $100 billion mega fab.
100 billion.
Yeah. That's not just an investment. That's like a commitment to an entire industrial future for them in the U.S.
Absolutely. That approval, I mean, it lays the groundwork for potentially decade-long growth. And it signals a massive government partnership, doesn't it? Especially considering the whole geopolitical landscape right now.
For sure.
That size of investment, it effectively creates an enormous barrier to entry for any smaller competitors trying to get in.
Right. And it reinforces the domestic U.S. supply chain, which probably mitigates some risks related to, production instability overseas.
Definitely. And that domestic commitment, it's got to be crucial for future R&D too, right? Especially since we know they're heavily involved in these U.S. AI workforce initiatives.
Yeah, it really solidifies their role as like a critical national partner in the whole AI race, not just some chip vendor.
Okay, so tying that infrastructure back to product strategy. There's some interesting market chatter, isn't there? Rumors suggesting they might be accelerating the timeline for HBM4 commercial availability, maybe into early 2026.
Yes, have that chatter too. If they can actually pull that off, and that's a big if in semiconductor timelines.
Huge if.
It means they could potentially leapfrog key competitors like SK Hynix in the next generation of AI memory. That would cement their leadership position years ahead of schedule, potentially.
Wow, okay. That would be massive. So lots of long-term potential. But let's unpack the near-term stuff, the volatility, the triggers. For investors, what are the key dates or events we need to watch over the next few months? The things that will either confirm or maybe derail this bullish thesis?
Okay, critical dates. Definitely keep December 17, 2025 circled on your calendar.
December 17th. Got it. Earnings.
Yep. That earnings report is the immediate flashpoint. The consensus right now anticipates another beat, mainly due to that high memory pricing and the product backlog we already discussed.
Makes sense given the HBM demand.
But the one I'm watching most closely is actually the Q1 fiscal 2026 earnings release. That's set for January 14th, 2026.
January 14th. Why that one specifically?
Because that report, I think, will be the real definitive test of whether this AI cycle is truly structural and sustainable for them.
Okay. What metric are you watching?
Gross margins. We need to see if those historically elevated gross margins, remember, cloud memory margins recently hit a massive 59%. We need to see if they can be maintained.
59%. Wow.
Yeah. That 50% plus gross margin level, that's the key difference marker, right?
Right.
It separates a typical memory upcycle from a potential structural transformation for the company.
So if those margins hold above, say, 50% through early 2026,
then it fundamentally changes how investors have to value the stock going forward, I think. It proves the AI premium is real and sticky.
okay, that's a key metric for everyone to watch. And from a technical standpoint, looking at the chart, the momentum seems extremely strong, doesn't it? Suggests real institutional conviction.
It does. As of early November, the current price is $222.77. It's sitting right near its 52-week high of $232.40.
Very strong.
And if we look at the support levels, the extreme separation between the current price and the simple moving averages is pretty telling.
How so?
Well, the price is significantly above the 50-day SMA, which sits way down around $167.64.
Okay.
And it's dramatically above the 200-day SMA, which is all the way down at $116.88.
Wow, big gap.
That kind of gap, it signifies a really rapid, confident, and highly committed inflow of institutional money. It's moving too fast for those slow-moving averages to even catch up.
And analyst confidence backs this up too, right? You mentioned 31 analysts rating MU as a buy.
Exactly. Institutional inflows seem robust. Major funds increasing positions shows that large cap investor interest is definitely there.
Okay, so we've established the incredible upside case. It sounds compelling, but, every boom market carries risk. What are the major counter-arguments here? Because you really can't just ignore the past with memory stocks.
No, you absolutely can't. And the main sort of company-specific risk for Micron is still that inherent cyclicality of the memory sector, pricing
The
volatility.
boom and bust cycle?
Exactly. This has plagued the industry for decades, right? Where massive profits can quickly turn into painful losses because of oversupply.
Yeah.
So the core question is, has AI truly fundamentally decoupled them from this cycle this time?
And do we have an answer yet?
Well, Management has demonstrated an ability to adjust production to try and mitigate the downside, but the risk that supply eventually catches up to even this huge demand, it still remains. It has to.
Okay, cyclicality is risk number one. What else? Geopolitics, China.
Yeah, we also have the geopolitical factor, China regulatory exposure. There are some unconfirmed reports suggesting the company is phasing out some specific server chip activity in China after that regulatory ban they faced.
Right, so is that a major headwind?
Well, any loss of market access is obviously negative short term.
Yeah.
But our sources seem to indicate this is being rapidly and maybe even entirely offset by the extreme and growing AI demand of the US and Europe.
So more like a rotation of revenue geographically rather than a net loss overall.
That seems to be the narrative, yeah.
A rotate? Okay. And didn't we also see some noise back in October around insider selling? CEO and another exec?
We did. You always see that predictable noise, right?
Yeah.
A few negative headlines about sales by the CEO, Sanjay Mehrotra, and EVP, Scott DeBear.
But isn't the real story there how the market reacted? Or rather, how it didn't react?
Exactly. The market basically just shrugged off those headlines. Analysts almost immediately reiterated their strong ratings, kept raising price targets, and just overrode that temporary market pressure. That, to me, demonstrates just how overwhelming the underlying AI fundamentals in those forward projections are right now.
Yeah, the market simply didn't seem to care about a few million in insider sales when billions, potentially tens of billions, in future earnings are being projected. The signal got lost in the noise.
Precisely. So wrapping this all up, what does this mean for you, the listener, trying to decide on Micron?
Well, the overall bullish case looks incredibly compelling, doesn't it?
It does. The investment thesis, based on everything we've seen, holds an overall bullish rating, maybe like a 9 out of 10. Primarily driven by that sector leadership in the critical AI supply chain and that just best-in-class revenue acceleration we covered.
Absolutely. And it seems like the stock could be suitable for both short-term trades, given those upcoming earnings and guidance catalysts in December and January.
Right, catalyst-driven plays.
And also for longer-term investments based on that structural growth story and their potentially commanding competitive leadership in next-gen memory, especially if HBM4 comes early.
So it really boils down to monitoring one key number next year for confirmation, 50%. Can they keep those crucial cloud memory gross margins consistently above 50%? That's the indicator. That tells you if this AI cycle is truly a structural revolution for Micron or just another, albeit massive, cyclical win.